Okay, well, another stock I know that you track closely is Minda Industries, which is now called Uno Minda. So we have the management with us. Gurmeet, just request you to listen into the conversation and then give us your thoughts. Uno Minda is looking to invest around 300 crores to expand its manufacturing capacity of four-wheeler alloy wheels and four-wheeler automotive switches in order to meet the rising demand. We all know that there is a slew of new launches, especially in the electric vehicle space, and a lot of these auto ancillary companies are gearing up to service these OEMs. So Sunil Bohra, the Group Chief Financial Officer at Uno Minda, joins us now to talk about that. Sunil, good morning and thanks for joining in. Tell us a little about this expansion plan. When will it come on stream and when will it start to, show up in your revenues?
Yeah, thank you, Sonia. So board has approved 300 crore worth of expansion yesterday. It's primarily into two businesses, as you rightly mentioned. The first one being in the four-wheeler alloy wheels, and as you know that this is actually the third expansion in last 12 to 18 months, which we are going ahead with, because the application ratio of the alloy wheels to steel wheel has continuously been increasing, and we believe that still there is a huge potential for further growth. Just to give some background, when we entered this business 6 odd years back, the application ratio was in low teens, which today is in mid 30s. And if we compare with some developed economies, it's very high. It's maybe in 80-90% kind of a zone. So there is definitely going to be a significant demand potential even in future, where the application ratio improves. Even from customer perspective, people are preferring alloy wheel cars, or maybe people are trying to get the alloy wheels retrofitted when they buy the car from the showroom or in the aftermarket. So there is a huge potential for four-wheeler alloy wheel business. And in fact, that's the business which we have been running more than capacity. And there has been continuous increase in demand. So this expansion will increase supplies by maybe middle of next calendar year. And with this, our alloy wheel capacity for four-wheeler will be something around 3.5 million wheels per year. Moving to the four-wheeler switches, that segment also has been doing pretty well, and we have been getting some traction from export as well. So our existing facility in Manesar, we have been facing space constraints. So we will be moving some part of that business to create some space to a new location in phase one. And gradually in phase two, at the later stage at appropriate time, we might expand that facility for which the land is acquired, which will be sufficient to meet the next phase of growth as well. So that also plant we are expecting to commission by middle of next calendar year.
Okay, Mr. Bohra, good morning. Just a couple of questions. The investment that has been approved, it is part of the overall Capex guidance for the year, right? 600 crores.
No, so this is definitely beyond that.
Okay.
So the guidance which we gave at the beginning of the year, we had already few projects running, and also the sustaining Capex, which has taken a pause in past couple of years because of the pandemic, that also is being gradually kicking in. The 600 crore definitely was excluding this Capex, which has just been approved yesterday.
Okay, so now is there a new guidance? I mean, including this, will there be more?
Difficult to say at this stage, because I think our stated guidance has been that we continue to grow more than industry growth at least 1.5x of the industry growth. And to meet this continuous growth, definitely we need to deploy or reinvest in the business. Obviously, our endeavor is to redeploy in the business where we can actually create shareholder value and get better returns. So at this point in time, I think our overall guidance will be 600 crore plus maybe part of this 300 crore, which has been announced yesterday.
Okay, all right. So, your kit value has increased recently because of the orders that you're getting from the facelift models that have been launched by OEMs, right? What does this mean for your margins? Because in the quarter gone by, your margins have improved. Now you're sitting at 10.4% margin, so it's double digits. Can you do better by the end of the year because of the rise that we've seen in the kit value?
No, definitely, Sonia. We do expect our margins to improve in the coming quarters. And at the beginning of the year, we did give a guidance for the full year EBITDA margin range of 11 to 12%. So with 10.4 in Q1, definitely we need to better on that so that we get average of 11 to 12, and we are committed still on to maintain that EBITDA margin guidance for the full year.
You know, the switching segment is your largest segment, some 30% of sales. But in Q1, that was absolutely flat. That segment did not do very much for overall growth. You're adding capacity there. Can you just talk us through the logic? I mean, you said you're constrained as is, right?
Yeah. So the kind of new businesses which we have been generating, obviously, the business which you get today, normally it gets fructified in 2 years or 3 years time, depending on the model launch of our customers, right? So today might be that capacity is sufficient for today's revenue, but if I have to increase my kit value, which I have got either share of business increase or increase in kit value, I have to obviously support that business going forward. So we have to invest in capacity and expand. So that today the business which might be constrained because of space, we need to create infrastructure not only for meeting the businesses which we have already secured, but also to make sure that we have a ready platform for future growth from there on. So that is why we are actually getting into a new location, and which will have enough space for catering to next leg of growth from this region, maybe for another 4 to 5 years.
Okay, and you're also winning a lot of orders in the electric vehicle OEM space. So in Q1, you bagged orders to the tune of 470 crores. When will you execute these orders? When will it flow through in your revenues? Will it be in FY23 itself? And any more order visibility on the EV side?
So, Sonia, as I said, most of these business which we secure, normally there is a cycle. So if you secure a business, then it gets into development cycle, proto, testing, etc., etc. So it will be minimum 12 to 18 months before you actually see the revenue flowing to your balance sheet or P&L account. So most probably all these businesses which we have secured this year will be trickling in gradually from the next financial year into the P&L.
And so far in Q2, I mean, on EV side, would it be possible to disclose the quantum of orders won?
So normally we do communicate whatever we have business we have secured on a quarter-to-quarter basis. So we have just completed our board meeting in the earlier part of this month on 8th and 9th only. We have sort of communicated the new business which we have secured. So it's too short a time to give you any update. So maybe the next call we can give you a little better update.
You know, just a quick bit. International business is about just under 20% of your overall sales. Is any of this macro slowdown talk having any impact whatsoever? Do you see it having any impact on your business?
Well, definitely it does. There is an impact in our European business, both Spain and Germany, if you see in terms of volume. But what is happening there, we have been adding more products. And because of more products and increased kit value, we have been able to maintain our absolute revenue, or even actually in Q1, we have done highest ever revenue in our European entities. And if you talk of ASEAN, we are actually doing pretty well. In fact, just in the previous call, we also announced setting up of a new lighting plant in Vietnam. Currently, we have only switching plant. Now we'll be setting up another lighting plant in Vietnam. So all this, I think, if you see from the strategy perspective, what we have adopted a year and a half before, which is setting up our dedicated marketing offices in ASEAN and Europe, they are actually now reaping us fruits by getting more businesses. And that is what you are seeing in terms of additional capacity and the new plants which we are setting up in these regions.
By the end of the FY23, what kind of growth are we looking at on the revenues? In Q1, you had a 60% growth, of course, on the back of a lower base. But by the end of the year, what's the growth target?
It's very difficult. We know that we have dependency on 90% of our revenues from our OEMs. And those volumes are not in our hands. What is in our hands is to see that how do we consistently increase our kit value and share of business. And as you have seen in past few years, we are committed that we should be able to get at least 1.5x growth of what industry grows. So our goal is to outperform the industry growth, and we are pretty confident we should be able to do in this year as well.
Okay, all right. We leave it at that. Thanks a lot for joining us, Sunil, and have a great one. That's Uno Minda. Good